And locally, we will be hoping to chase those lost gains today after paring the losses yesterday. The rand a little changed on Thursday after the Reserve Bank held the interest rates steady as expected, while markets were generally under pressure amid the Federal Reserve's hawkish tone, the signal there for higher interest rates in the longer period. Well, Jimmy Moyaha is independent markets analyst, joining us now for a quick update on how things are shaping up at the JSE. Jimmy, good morning to you. So let's begin with your quick overview of how the markets have opened in early trade and in particular the reaction to the local repo rate decision.
Morning, Tole. Morning to the viewers. The local bourse has opened in the green following some green movements we've seen in Asian markets. But just to take a step back to some of the points that you touched on around U.S. markets and where we're seeing just the global landscape. Yesterday, U.S. markets closed in the red with NASDAQ, S&P and the Dow all more than 1% in the red. In Asian session this morning, we saw an announcement from China that they're relaxing regulatory, or they're making regulatory adjustments that are aimed at stimulating the economy and stimulating business. We saw that the last time they made regulatory adjustments, it was to the detriment of the tech sector, but this time it's to boost business, and the market has received that exceptionally well. Hong Kong, Hang Seng's up about 1.6%, Shanghai's up about 1.5% in the green, with Tokyo about 0.5% in the red because they had their inflation print and their rates announcement today, and the inflation print was slightly worse than expected, but they still kept negative interest rates. I think Japan might be the only country in the world that still has negative interest rates at this stage. But the overall sentiment is now shifting towards pricing in the anticipation of that more hawkish Fed, and it looks as though that could be a catalyst for China at least to start to see some demand recovery on their side, which could in turn boost emerging markets such as South Africa. We have to take into account the oil price as well, because there's some developments happening on that side, but we'll get to that in a sec. In terms of the actual performance of the local bourse in early trade, we're up about 0.5% on the all share, about 0.2% on the top 40, 0.5% on resources, and about 0.5% in the green on financials. So looking like a good start to the Friday for local equities. The currency is still holding below 18 Rand 90 against the dollar, crucially below that 19 Rand level that we saw it come to before the Fed announcement. About 22.15 against the pound, slightly stronger and firmer there, and firmer against the euro at about 20 Rand and 6 cents.
So let's talk about those oil prices this morning, rising as concerns that the Russian ban on fuel exports could tighten global supply. Help us make sense of those developments.
Yeah, so oil price is sitting at $93.64. It's up about 0.3%, still off of the $95 level that we saw earlier in the week. I think the market has priced in a lot of that Russian situation in the past. I think what's going to drive the oil price more is OPEC's outlook. We remember that when you and I started having the OPEC conversation about supply cuts as far back as August, we said that last August and then extend into September, but it looks as though they're extending through to the end of the year. So the bigger question there is, what is OPEC's plan? Because as a bloc, they have accounted for the disruption in Russian supply cuts already, and it's very easy for them to come into the market and say, okay, cool, Russia can't do 100,000 barrels per day extra. Iran, you take up the shortfall, or Saudi will produce the shortfall, and it's very easy for them to balance those sorts of numbers within the bloc themselves. I think the bigger concern for them might be wanting to see Chinese demand recovery, wanting to see where European markets sit, because we've got ECB CPI next week. We had ECB rates decision this week. We had UK CPI data this week as well. So we've had quite a bit of data points that point towards where the economy could be going, or where global markets could be going. And at the moment, I think OPEC as a bloc is just going to sit back and say, we're not too concerned about where we are because we're still above the $80 sort of base level that we've set for ourselves. But for us, it means that we might take a little bit longer to get to that $100 a barrel level, which is still very much something that we have to contend with.
So let's talk company news. Investec giving investors a pre-close trading update and a trading statement. talk us through their numbers?
Yeah, so the numbers are still under review with the auditors, but we know that we're going to get some really good numbers out of Investec. They sort of just gave us an inclination of some of the strategic decisions that they've had to make in the past, letting go of some of their business units or disposing of some of their business units, strategically having that, I think it was a 6.7 billion rand share buyback program to optimize liquidity for the South African operations. But all in all, we also got an indication that headline earnings per share and basic earnings per share are going to be to the upside. We expect that profits will be to the upside. Operating profit will be at least 25% higher. Specialized banking would be at least 40% higher. We're going to have to wait until the 16th of November to see what those actual numbers look like. But by all accounts, the update seems to be extremely positive. In about 20 minutes or so, there is an investor call for those that want to jump on. They're waiting for sort of 9 o'clock UK time to start the investor call because of the duality of where Investec sort of plays. And so when we jump into that investor call, there might be a bit more color that's shed on some of the other moving parts within the business. But by all accounts, the updates that we're getting from the Investec team say that when we get those numbers in November, the interims, it's going to be good numbers.
Let's conclude the conversation then with SAB Zenzele Kabili, which has published a condensed interim financial statement for the 6 months, which ended on the 30th of June 2023. What do their numbers look like?
Yeah, so if you remember, this is the BE listed vehicle that then invests in AB InBev. And they had a rough time last year, or this time last year, as a result of just the fair value adjustment to the AB InBev share price and just the movements that had happened then. That fair value adjustment this year has served them well. It has improved the performance of the business. They've earned a dividend from AB InBev's dividend payout. So AB InBev announced a dividend around the 2022 dividend of about 75 euro cents, that is. And to that, the business, the Zenzele Kabili business, earned just under 80 million rand in dividend income. They set aside the usual operational fees, which is just under 8 million rand. They paid out about 75% of the dividend. About 54 million rand will be paid out. The fair value adjustment to the AB InBev share price has served them well. It's swung the business effectively from a significant loss in the prior period to a profit this period, and they also declared then a 45 cents in the rand dividend per share by way of special dividend to shareholders. So good turnaround for them, nice benefit for the Zenzele Kabili shareholders at this stage.
Fantastic news. Jimmy Moyaha, let me thank you very much for your time.